Imagine this. China, with its towering skyscrapers and bustling financial hubs, decides it's had enough of the US dollar. They start dumping their massive US Treasury holdings. I'm talking trillions of dollars worth, and go all in on gold. It sounds like something out of a dystopian financial thriller, right? But what if I told you it's not as far-fetched as it seems? What if China decided to move away from the US dollar, dumping its US Treasury holdings and shifting toward gold? This scenario could trigger seismic shifts in global markets, geopolitics, and the financial order. Let's break down the possible consequences step by step. Now, I'm not saying this to cause a panic, but if China decided to hit the sell button on its US Treasury holdings, the global financial system would basically experience the equivalent of trying to parallel park a whale in a bathtub. It's going to be messy, folks. First off, the impact on US Treasury yields would be about as subtle as a mariachi band in a library. See, when a country as large as China starts selling off their bonds, the price of those bonds plummets faster than a pigeon trying to avoid a very enthusiastic toddler with a baguette. And when prices fall, yields rise. And what do rising yields mean? Well, for the US government, it means borrowing money just got a whole lot more expensive. And that's before we even get to the impact on businesses and, you guessed it, consumers. But wait, there's more. As if we needed another reason to lose sleep, the dollar itself would start to look about as stable as a Jenga tower built by a caffeinated squirrel. Why? Because suddenly there's a whole lot less demand for the US dollar in the global market. And when demand drops, well, you know what happens next. It's basic economics, people, but with significantly higher stakes than deciding whether to buy that avocado toast. And just when you thought it couldn't get any more chaotic, imagine other countries seeing the US dollar taking a nosedive thinking, well, if China's jumping ship, maybe we should too. Suddenly everyone's scrambling to diversify their reserves, and the good old greenback is left looking about as popular as a vegan sausage roll at a barbecue competition. So, the US dollar is having a minor meltdown. Everyone's panicking. But amidst all this chaos, there's one asset that's looking shinier than ever: gold. You see, when China starts buying up gold like it's going out of style, the price of gold doesn't just gently increase, it explodes like a Michael Bay film, except instead of explosions, it's just people in suits on trading floors screaming into telephones. And as the price of gold skyrockets, countries sitting on their own little mountains of bullion start looking pretty smug. It's like they suddenly won the geopolitical lottery, while everyone else is stuck trying to figure out how to barter their way out of this mess. But here's the kicker: central banks around the world, those bastions of financial prudence, start to get a little twitchy. They see the dollar floundering, gold going through the roof, and they start thinking, maybe we should hedge our bets too. And just like that, the gold rush is on. Okay, so we've got a potential currency crisis brewing, a global gold rush. And if you think things couldn't get any more tense, well, you clearly haven't been paying attention to the geopolitical arena lately. Because let me tell you, when China makes a move like this, the US isn't just going to sit back and offer them a congratulatory fruit basket. Oh no, my friends. This is where things get really interesting, or, depending on your perspective, terrifying. The US, faced with this sudden challenge to its financial dominance, might just decide to dust off its playbook of economic countermeasures. We're talking sanctions, trade restrictions, maybe even a strongly worded letter to the UN. And it's not just the US and China involved in this geopolitical tango. Other countries, watching from the sidelines, have to pick a side. Do they stick with the increasingly volatile US dollar? Or do they throw their lot in with China and its gold-backed ambitions? It's enough to make your average game of Risk look like a friendly game of checkers. Now, while the US is busy trying to maintain its grip on the global financial system, China's not just going to sit around twiddling its thumbs. They see this as their chance to finally give the yuan the global clout it's been craving. It's like that moment in a teen movie where the awkward duckling takes off their glasses, lets down their hair, and suddenly everyone realizes they were a swan all along. China knows that for the yuan to become a major player on the world stage, they need to make it more attractive to other countries. So they get to work reforming their capital markets, making the yuan more convertible and easier to use for international trade. Basically, they're giving the yuan a financial makeover, and let's be honest, it's long overdue. And here's the real kicker: countries like Russia, Iran, and even some members of the EU start to see the appeal of a world less reliant on the US dollar. They start deepening their trade ties with China, using the yuan instead of the greenback. It's a slow burn, but the shift is happening, and the implications for the future of global finance are about as subtle as a sledgehammer to a piggy bank. Okay, so we've established that the US dollar is having a bit of an existential crisis, gold is the new hot commodity, and the yuan is looking to make its mark on the world stage. But what does all this mean for the average central bank trying to navigate this financial minefield? Well, the answer is simple. Diversify, diversify, diversify. Central banks around the world, those masters of risk management, or at least they try to be, start looking at their hefty piles of US dollar reserves like they're a plate of suspiciously old sushi. They know they need to spread the love, financially speaking, so they start reducing their dollar holdings and diversifying their portfolios like it's going out of style. We're talking a mix of currencies, a dash of gold, maybe even a sprinkle of those newfangled digital currencies everyone keeps talking about. It's all about hedging their bets and trying not to get caught with their pants down, financially speaking, when the next crisis hits. But let's not get ahead of ourselves. The dollar's dominance isn't going to vanish overnight. It's deeply entrenched in the global financial system, like that one stubborn stain on your favorite rug. But the writing's on the wall, folks. The world is moving towards a multipolar financial system, and the dollar's monopoly is starting to look about as stable as a house of cards built on a roller coaster. Now, while the rest of the world is busy diversifying their portfolios and hedging their bets, the US isn't exactly sitting back and binge-watching Netflix while Rome burns. They've got a whole host of problems to deal with, and none of them are particularly easy to solve. First off, they've got to figure out how to manage their ballooning debt. Remember all those US Treasury bonds China was selling off? Well, someone's got to buy them. And if there aren't enough willing buyers, the US is going to have to get creative. We're talking fiscal reforms, spending cuts, maybe even tax hikes. Basically, all the things that make politicians break out in a cold sweat. But wait, there's more. The US also needs to find new buyers for its debt, and fast. They might try to woo Japan or the EU, but that just increases their reliance on a smaller pool of investors, which, let's be honest, isn't exactly a recipe for long-term stability. It's like trying to build a house on a foundation of jelly. So, we've got China making power moves, the US scrambling to maintain its grip, and the rest of the world just trying to keep their heads above water. It's enough to make you want to withdraw all your money, buy a cabin in the woods, and live off the grid. But before you do, let's take a deep breath and look at the bigger picture. History has a funny way of repeating itself, especially when it comes to global finance. Just look at the shift from the British pound to the US dollar as the world's reserve currency. It wasn't a sudden coup, but a gradual transition that took decades to unfold. So what can we learn from the past? Well, for starters, don't expect the dollar's demise to happen overnight. It's going to be a slow, messy, and often chaotic process, with plenty of twists and turns along the way. We might see the emergence of regional trade pacts, with countries favoring local currencies over the dollar. We might even see the rise of new reserve currencies challenging the dollar's dominance. Or maybe, just maybe, we'll muddle through, finding a way to adapt and evolve as we always have. So, is this the beginning of the end for the US dollar's reign as the world's reserve currency? Or is it just another chapter in the ever-evolving saga of global finance? Honestly, folks, nobody knows for sure. But one thing's clear, the world is changing and the financial landscape is shifting beneath our feet. While China's move away from the US dollar could trigger market volatility and geopolitical tensions, an immediate collapse of the dollar is unlikely. The dollar remains deeply integrated into global finance. China, despite its ambitions, must balance its strategy carefully to avoid harming its own economy. However, one thing is clear, the world is shifting toward a multipolar financial system, with gold, the yuan, and digital currencies gaining influence. Is this the beginning of the end for the US dollar's dominance? Or just another chapter in the ever-evolving global economy? Let us know your thoughts in the comments below.